Hey everyone, welcome back to Tesla Daily. Today is March 23rd, 2026, and we've got a lot to cover. First up, let's talk about the Tesla Semi production update. It's exciting to see how this is evolving. Next, we'll dive into Tesla's bold plans for chip manufacturing. This could really change the game for us. But it's not all smooth sailing. We're also seeing some mixed signals in the market, which we need to discuss. On a brighter note, Tesla's solar ambitions are expanding. We'll explore what that means for us and the environment. And we can't forget about the ambitious Terafab project. It's a big step forward, and we'll break down what to expect. So let's jump right in. Tesla's Semi is gearing up for a major production ramp-up, with the company revealing impressive updates during a recent episode of Jay Leno's Garage. The Semi has logged 13.5 million miles across a few hundred vehicles, showcasing its real-world performance and reliability. According to Dan Priestley, head of the Semi program, one truck has even reached an astounding 440,000 miles. This milestone is a testament to Tesla's engineering prowess and the growing demand for electric trucks. The Semi's long-range version boasts a range of 500 miles and can regain 60% of its charge in just 30 minutes, making it a viable alternative to traditional diesel trucks. Notably, Tesla has managed to cut approximately 1,000 pounds from the truck's weight, achieving effective payload parity with diesel counterparts. This weight reduction, combined with a federal weight exemption for electric vehicles, allows the Semi to haul up to 45,000 pounds, a significant advantage for logistics companies. Aerodynamics have also seen a 7% improvement, bringing the drag coefficient down to approximately 0.4, which is lower than that of a Bugatti Veyron. This enhancement is crucial for maximizing efficiency and range in heavy-duty applications. The Semi's innovative powertrain architecture, featuring dual rear axles for distinct purposes, further optimizes performance by disengaging the torque axle at cruising speeds to reduce drag. As Tesla prepares to ramp production at its dedicated factory in northern Nevada to 50,000 units per year, the company is poised to meet the growing demand for electric commercial vehicles. The anticipated starting price for the long-range variant is around $290,000, which, while higher than initial projections, reflects the advanced technology and capabilities of the Semi. Jay Leno emphasized the truck's lower running costs as a key selling point, stating, "Switching from diesel to the Semi makes financial sense." In summary, the Tesla Semi is not just another electric vehicle, it's a potential game changer for the trucking industry. With its impressive specs, real-world validation, and a focus on efficiency, we believe the Semi will attract significant interest from logistics companies looking to transition to electric fleets. As production ramps up, we can expect to see a transformative impact on the market for heavy-duty trucks. Next up, another key development. Tesla is currently experiencing a mixed bag of market signals as it continues to innovate and expand its electric vehicle lineup. On one hand, rising gas prices are driving increased interest in electric vehicles, EVs, with used Tesla models seeing a notable price increase. According to Car Gurus, the average price for used Teslas has risen by over 6% in the past month, outpacing the broader used market's 2% increase. The price for a used Model X has surged by an impressive 11%, reflecting a shift in consumer preferences as gas prices approach $4 per gallon. Kevin Roberts, Director of Economic and Market Intelligence for Car Gurus, noted, "Gas prices are climbing, and shoppers are responding by shifting more attention toward electrified options. However, this positive trend is juxtaposed with significant challenges. Reports of motion sickness among Tesla passengers have gained traction, with many individuals citing nausea and discomfort, specifically when riding in electric vehicles." A viral video highlighted a woman's severe reaction to riding in a Tesla, prompting hundreds to share similar experiences. While Tesla vehicles are praised for their smooth rides, the unique driving dynamics of EVs may be contributing to these discomforts, raising concerns about customer satisfaction. In terms of production, Tesla is making strides with the anticipated launch of the Model Y/L, a long-wheelbase version of its popular SUV, recently spotted at Gigafactory, Texas. This model is designed to cater to families with its 6-seat configuration and ample cargo space. The Model YL has already launched in markets like Thailand, Australia, and New Zealand, with a North American debut potentially on the horizon, despite previous indications that it might not arrive until late 2026. The vehicle boasts impressive specs, including a 0 to 100 km/h acceleration time of just 5 seconds, and a cargo capacity of up to 2,539 liters. As Tesla continues to navigate these complexities, the outlook remains cautiously optimistic. The rising demand for EVs, coupled with Tesla's innovative product offerings, positions the company favorably in the long term. However, addressing customer concerns about vehicle comfort will be crucial for maintaining brand loyalty and market share. Overall, while challenges exist, Tesla's commitment to expanding its product lineup and adapting to market demands suggests a resilient future ahead. Here's the next update you should know. In a significant move that underscores Tesla's commitment to advancing its AI and robotics capabilities, CEO Elon Musk announced plans to build 2 advanced chip factories in Austin, Texas. This initiative, dubbed Terafab, aims to address the growing demand for semiconductors necessary for Tesla's vehicles and humanoid robots, as well as for SpaceX's AI data centers in space. Musk emphasized the urgency of this project, stating, "We either build the Terafab or we don't have the chips. And we need the chips, so we build the Terafab." This statement reflects a critical challenge facing the tech industry. The current global chip production is insufficient to meet the escalating needs of companies like Tesla and SpaceX. The new facilities are expected to produce 1 terawatt of computing capacity annually, a substantial increase compared to the approximately half a terawatt currently generated across the United States. The 2 factories will focus on manufacturing 2 distinct types of chips, one for Tesla vehicles and the Optimus humanoid robots, and another designed for AI satellites in space. Musk's vision includes producing chips that can support between 100 to 200 gigawatts of computing power per year on Earth, showcasing Tesla's ambition to not only lead in automotive technology, but also in AI and robotics. Despite the excitement surrounding this announcement, it's important to note that building semiconductor fabrication plants is a complex and costly endeavor, often requiring years and billions of dollars to fully operationalize. Musk has acknowledged the contributions of existing chip suppliers like Samsung, TSMC, and Micron, but insists that the demand from his companies will eventually surpass total global chip output. In a broader context, this move aligns with Tesla's ongoing transition towards becoming a more integrated technology provider, moving beyond just vehicle manufacturing to encompass AI and robotics. As we look to the future, the successful implementation of Terafab could position Tesla as a leader in the semiconductor space, potentially reshaping the landscape of AI and robotics industries. Overall, while the ambitious nature of this project raises questions about feasibility and timelines, the potential rewards could be transformative for Tesla and its subsidiaries. We remain cautiously optimistic about the long-term impact of these developments on Tesla's market position and technological advancements. Now let's shift to the next story. In a bold move to secure its technological future, Tesla, alongside SpaceX and xAI, has announced plans for a staggering $25 billion semiconductor manufacturing facility dubbed Terafab. This ambitious project, unveiled by CEO Elon Musk, aims to produce up to 1 terawatt of computing power annually, targeting advanced 2-nanometer chips, essential for Tesla's full self-driving FSD technology and the Optimus humanoid robot program. Located near Tesla's Gigafactory in Austin, Texas, the facility is designed to consolidate every stage of semiconductor production under one roof, from chip design to testing. However, this groundbreaking initiative comes at a time when Tesla faces increased regulatory scrutiny. The National Highway Traffic Safety Administration, NHTSA, has escalated its investigation into Tesla's FSD system, particularly its performance in challenging visibility conditions. This investigation covers over 3.2 million vehicles and raises concerns about the safety of one of Tesla's most critical technologies. As Musk noted, "We either build the Terafab or we don't have the chips, and we need the chips." The Terafab project is expected to produce two distinct types of chips, one for Tesla's vehicles and humanoid robots, and another designed for the extreme conditions of space, supporting SpaceX's orbital data centers. Musk emphasized that 80% of the facility's output will be directed towards space applications, which he believes will revolutionize data processing capabilities. Despite the grand vision, analysts caution that the financial and technical hurdles ahead are substantial. Barclays has warned that the capital expenditure for Terafab could exceed initial estimates, potentially reaching levels far beyond the $50 billion mark. The ambitious production targets also raise eyebrows, as achieving a capacity of 1 million wafer starts per month would represent approximately 70% of the current global output from TSMC, the world's largest chip manufacturer. As we look towards the future, the success of the Terafab initiative will be pivotal for Tesla's long-term strategy in AI and robotics. However, the ongoing regulatory challenges surrounding FSD could impact investor confidence and timelines for these ambitious projects. The coming months will be crucial as we navigate this complex landscape of innovation and regulation. Now, let's shift to the next story. Tesla is currently navigating a turbulent period marked by a lawsuit related to its Cybertruck and the highly anticipated rollout of its full self-driving FSD software version 14.3. The lawsuit stems from a tragic incident involving a Cybertruck that caught fire after a crash, resulting in the deaths of 3 passengers. The sole survivor is suing Tesla, claiming that the vehicle's doors failed to open, hindering escape. This incident raises concerns about the safety of Tesla's electrical systems, which have previously been criticized for impeding rescue efforts. In the midst of this legal turmoil, Tesla is also on the verge of launching FSD version 14.3. which is expected to enhance the vehicle's reasoning capabilities and decision-making processes. CEO Elon Musk. Now let's shift to the next story. We are witnessing a pivotal moment for Tesla, as the U.S. National Highway Traffic Safety Administration, NHTSA, escalates its investigation into the company's full self-driving FSD software. Initially opened in October 2024, this probe has now expanded from a preliminary evaluation of 2.4 million vehicles to a comprehensive engineering analysis covering 3.2 million vehicles. This step is crucial as it precedes any potential recall actions. The NHTSA's concerns center around the camera-based FSD system, which may struggle to detect various roadway conditions that affect visibility, such as glare and airborne obstructions. Reports indicate that there have been 9 incidents potentially linked to these issues, including 1 fatal crash and 2 injury crashes. The agency stated FSD also lost track of, next up, another key development. We are witnessing a significant move from Tesla as the company negotiates a $2.9 billion deal to purchase solar manufacturing equipment from Chinese suppliers, including industry leaders like Suzhou Maxwell Technologies. This investment is aimed at bolstering Tesla's goal of achieving 100 gigawatts of solar production capacity in the U.S. by 2028. However, this ambitious plan coincides with China's recent decision to cut tax rebates and export incentives for solar panels and batteries, which could lead to increased costs for solar projects, particularly in Africa. The implications of China's policy shift are profound. As Wangari Muchiri, an energy analyst focused on Africa, noted, "We are likely to see solar panel prices increase in Africa because most of the inputs come from China. This change is expected to raise expenses across the continent, which already faces challenges due to logistics and tariffs." The timing of Tesla's deal is crucial, as it seeks to establish a robust domestic solar manufacturing base while navigating these rising costs. Tesla's push into solar energy is not just about diversification. It's a strategic move to evolve from an electric vehicle manufacturer into a comprehensive green energy company. The company's fourth quarter 2025 earnings call highlighted the urgency of this transition, as electricity demand in the U.S. reached record levels, driven by the rapid growth of AI data centers and the electrification of transport. Deliveries of the new solar equipment are expected to begin before autumn, with the machinery destined for Texas, where Tesla plans to enhance its solar production capabilities. This initiative is part of a broader strategy to integrate the entire supply chain, from raw materials to finished solar panels.
While Tesla's ambitious plans are commendable, they are not without risks. The geopolitical landscape, particularly the tensions between the U.S.
and China, could complicate the execution of this deal. Regulatory hurdles may arise, potentially impacting Tesla's ability to capitalize on this investment fully. In summary, Tesla's $2.9 billion investment in solar equipment marks a pivotal step in its quest for energy independence and sustainability. However, as we look to the future, we must remain vigilant about the external pressures that could influence both costs and supply chains in the solar energy sector. Here's the next update you should know. In a dramatic move amidst a partial government shutdown, Elon Musk has offered to personally cover the salaries of Transportation Security Administration (TSA) workers who have been left without pay. This proposal comes as the Department of Homeland Security (DHS) funding lapse has extended for over a month, coinciding with the busy spring break travel season. Musk stated on X, "I would like to offer to pay the salaries of TSA personnel during this funding impasse that is negatively affecting the lives of so many Americans at airports throughout the country." The shutdown, which began on February 14th, has left TSA employees classified as essential, continuing to work without pay. This situation has led to increased sickouts and resignations, raising. Now let's shift to the next story. In a significant legal setback, we learned that Elon Musk has been found liable for misleading investors ahead of his $44 billion acquisition of Twitter, now known as X. A California jury has ordered Musk to pay up to $2.6 billion in damages after determining that his public statements about the social media platform's fake accounts were intentionally misleading. This ruling underscores the potential consequences of Musk's social media presence and its impact on investor sentiment. The jury concluded that Musk's tweets, which claimed that Twitter's fake accounts were much higher than the company's reported figures, led to a decline in the stock price, prompting investors to sell shares at lower prices than they would have otherwise. Musk himself acknowledged, "Now let's shift to the next story." In recent days, Tesla has found itself at the center of multiple alarming incidents that raise serious questions about vehicle safety and driver behavior. On March 22nd, a tragic 7-vehicle crash in Center Valley, Pennsylvania, resulted in the death of 62-year-old Brian McKenna, who was driving a 2020 Tesla. The vehicle crossed the median and struck multiple cars, leading to a chain reaction that injured 3 others. Authorities are investigating whether a medical event contributed to the crash, but the incident has already drawn attention to the potential risks associated with Tesla vehicles. In another incident, a 20-year-old woman was arrested in Lexington, Kentucky, after hitting 4 pedestrians with her Tesla Model 3 while allegedly driving under the influence. That's a wrap for today, folks. Thank you for tuning in to Tesla Daily Insights. We appreciate your support and interest in all things Tesla. We'll catch you in the next update.